This video is for educational purposes only and is not financial advice. Always consult a professional before investing. This piece is for educational purposes only. It is not financial advice. Always talk to a licensed professional before you invest. The numbers we see today, October 13, 2025, suggest heightened awareness is wise. The S&P 500 has started the month with a dip of roughly 5%. At the same time, the CBOE Volatility Index, or VIX, has climbed to 20. VIX 20 flags elevated concern, not panic. S&P 5% early October 2025. Does VIX 20 warn of crash risks like 1987's 22% Black Monday? Historically, October's average return since 1950 is about negative 0.8%. It's context, not a forecast. Use it to prepare, not to panic. One of the primary drivers of the current market anxiety is valuation. The S&P 500's price-to-earnings ratio is hovering around 28. A PE tells you how much investors pay for each dollar of earnings. Historically, the PE is closer to 16. At 28, the market is priced for significant future growth. High valuations leave less room for error. If earnings or sentiment slip, prices can correct downward. Next, inflation. Headline is 3.2%. That's above the Fed's 2% target. Elevated inflation squeezes profits by raising materials, labor, and borrowing costs. To fight it, the Fed may keep rates higher for longer. Higher rates slow expansion and make borrowing pricier for consumers. That can break economic activity in stocks. The labor market is slowing. 142,000 jobs this month. That's a clear deceleration. Too much cooling can foreshadow broader weakness. The yield curve remains inverted by about negative 0.15%. This has often preceded recessions, and quantitative tightening drains $15 to $18 billion weekly. Less liquidity, bigger swings. October's reputation for volatility is rooted in history. The panic of 1907, the crash of 1929, and the Black Monday of 1987. In 1987, the S&P fell over 20% in a single day. These are extreme outliers, not the norm, but unforgettable. Their timing cements October as a month for vigilance. Beyond crashes, traders watch chart patterns for clues. One is the cup and handle, a rounded base followed by a smaller pullback called the handle. As Investopedia explains, it resembles a teacup on the chart. Some analysts might cite Solana, SOL, showing a similar setup before a big move. But patterns are tools, not guarantees. They visualize psychology and potential momentum shifts. The global backdrop adds complexity. Geopolitical tensions, tariffs, or new trade shocks. An unexpected headline can override fundamentals. We've seen 5% shaves on surprise risk before. With QT ongoing, thin liquidity can amplify moves. No single factor decides October, but together they raise the odds of volatility. When VX is near 20, some investors add small hedges via VX-related ETFs. These are complex and short-term. Know the risks and decay. Keep hedges small. 1 to 2% can act like insurance. Consult a professional and read trusted sources like Investopedia. Here is the data behind the worry, kept simple. S&P dip, negative 5%. Historical outlier, 1987 dropped 22% in a day. VIX at 20 signals caution. Above 30 often aligns with panic spikes. Inflation at 3.2% can squeeze margins. QT removes 15 to 18 billion weekly. Tight liquidity. Curve inversion around negative 0.15%, often a recession signal. A 5% drop is a pullback, not a crash. A VIX at 20 is a warning, not destiny. Separate signal from noise and prepare across 4 steps. Preparation beats prediction. The goal is not to predict a crash, but to be ready for one. First, review your investment plan and any hedges. Check allocation, rebalance back to targets. If you use options or derivatives, know when and how they work. Assess liquidity. Cash is your safety net and dry powder. Dips can become long-term opportunities. And do not hesitate to consult a qualified advisor. Is an October crash your fear? Prep October risks, subscribe for alerts, and comment your hedge. Remember, context over panic, process over prediction. Chapters 0 Hook 0-130. Risks 1-30. Patterns 3. Prep and data 4. Yanao CTA.